everything was going great, been short forever. And I thought, let's cover this thing and nibble small long. It's not working. The stock is down, as you say, another 18 or 20% since then.
As we go into 2023, what will the growth rate be? I still expect decent double-digit growth. I'm forecasting 24% growth next year in deliveries.
Cathie Wood has also been adding to her position in the stock, kind of started to rebuild her position in the fall and then added more shares to it. And I guess it just sort of reinforces the sentiment that there are these true believers still in Tesla, but that it's a very divisive company and stock.
So here's me expecting a quiet start to 2023. Wouldn't have a whole lot to discuss for the first few weeks. Usually a very quiet period. Well, boy was I wrong. News is just broken. Tesla has cut prices across their range in China. Can't wait to see how the bears react to that one. Tesla stock continues to remain volatile AF, and everybody from stocks astrologers to Wall Street analysts are sharing their thoughts and opinions. And thanks to Athletic Greens, makers of one of my daily secret weapons, for sponsoring a portion of today's video. More on them a little later. Heads up to my Patreon members, posted another exclusive video today detailing the absolutely insane, and I mean absolutely insane amount of money podcasts can make these days. If you're a business nerd, finance nerd, money nerd, check it out. Who else to break the news? Over here on Twitter, this one from Sawyer Merritt. Tesla has reduced their car prices in China. Now here are the new starting prices. I'm not going to read them all. I will, however, focus on the percentage change. Model 3 rear-wheel drive, down 11.7%. Model 3 Performance, down just 5.7%. Model Y Standard Range, 10%. Model Y Long Range, down 13.5%. Model Y Performance, down 9.5%. Now, if you have a very short memory, which is a lot of people who are currently suffering from fear-induced brain damage, you may have forgotten that Tesla was forced to raise their prices up to 35% on these very vehicles over the last 24 months. Elon Musk literally on the record saying that the price for Tesla vehicles was, quote, embarrassing. Now we're seeing this start to reverse. Thank fuck. No doubt the bears, short sellers and fudsters with their micro-penis length time horizon will be celebrating, look, there's no demand, prices are collapsing, it's all over for Tesla. Those who've read Tesla's secret master plan on their website will understand their goal is to drive the prices down, and will also understand the many moving parts in the automotive market, EV incentives and so on. This won't be the last time prices go up or down. Hopefully the overall trend will continue to be down, but Tesla's going to have a lot of levers to pull as governments introduce or phase out EV incentives, blah, blah, blah. You'd literally have to be a moron, for example, if you know there's a high potential you'll be able to get thousands of dollars off your vehicle purchase price if you just wait a few months and then you go out and buy a vehicle you didn't need. So Tesla's going to need to incentivize consumers when they know there's a new incentive coming in or out. There's going to be a lot of this. Every time prices go down, it's the end of the world, no demand. And on the odd occasion when prices go up, Tesla's greedy. How dare they try and make so much profit? Of course, at the same time this is occurring, Tesla's material costs are coming down now, and they continue to drive their manufacturing costs down and benefit more from economies of scale, especially as they ramp up 2 brand new facilities. If I'm being honest, I hope Tesla stock gets absolutely annihilated as a result of these price cuts, because it's the end of the world. We'll have to wait and see what happens. I'm looking forward to seeing some more Tesla bulls decide, oh, no demand, I better sell my Tesla stock now. Panic, panic, panic. And by the way, I'm not judging you if you're a short-term trader who's overcome by emotions. I'm just pointing and laughing. In short, the purchase price for new Tesla vehicles in China now is a little bit less embarrassing.
What comes to mind, there's a great idiom in the English language. It's snatching victory from the jaws of defeat. You're not performing well in a political campaign or a sports season, that somehow you get the victory. What I've done, of course, is the exact opposite. I've reached deep down and snatched defeat from the jaws of victory, which is to say, everything was going great, been short forever. And I thought, let's cover this thing and nibble small long. It's not working. The stock is down, as you say, another 18 or 20% since then.
For those who don't know, the chart master here is one of the world's most reputable stocks astrologers. It appears he made a slight error. Perhaps he put a little bit too much faith in the whole stocks astrology, thought the chart was telling him the stock would go up, closed his shorts, went long and got absolutely fucked. As I've said in the past, my brain's far too tiny to be trading, so I'd rather just buy and hold. When I've got money, I buy. It's called dollar cost averaging. I think over the long term, this is an effective strategy. Unlike many stocks astrologers, I don't actually believe I know what's going to happen to the stock over the short or even medium term. This is why I don't try and outsmart the market. But hey, that's just me.
The question is basically, is the oversold circumstance condition in effect? It was a week ago, it is now. And can one get a tradable bounce? That's my hunch. Again, not working. Probably would have been better, or certainly would have been better just to stick with the short. But at this point, it's just so lopsided one way.
Yeah.
Everyone loved this thing, and now everyone hates it. And almost invariably in life, it's right to take the road less traveled. So not popular to be short when it was loved, and now not popular to be long when it's abhorred.
Right, which is usually a good, listen, this is why I love you. You could have been like, you know what, guys, I'm sick today. I'm not available. And yet you're like, sure, I'll come on and talk. I'll talk about what to do here, because these are the things investors grapple with every single day. Aswath Damodaran in last segment, don't know if you caught it, said the problem with Tesla is its exposure to a person and a personality and not a company right now. Now, you're not a fundamental investor, but you could imagine a major catalyst could be something like bringing in more management, adding a PR department. I don't know if it'll ever happen, but what else could be a catalyst, do you think, for the stock to move higher?
Well, it's interesting you mentioned that circumstance. Think about this, what is a great personality, but remember what happened at Apple. I mean, Steve Jobs, you couldn't have a bigger. He was pushed out. They brought in Jack Scully, who was running Pepsi, and literally, and he goes, I don't know anything about computers.
By the way, this is actually fucking hilarious. For those who don't know, Steve Jobs literally got booted out of Apple. Then Apple turned to shit, nearly went bankrupt, had to get Steve Jobs back, and he literally saved their ass. I'm getting some similar vibes here. Get rid of Elon. Talk about throwing the baby out with the bathwater.
They said, yeah, but you know a lot about business. And the first thing he did, he looked around and he said, I have my first act. I think we need to get rid of Steve Jobs. People are like, what? Sometimes it's the radical thing. I mean, Gerstner came in and IBM, they said, we got to get out of the computer business. They'll be like, what? Get out of the computer business? Meaning, so yes, obviously, would a Musk removal from the cult, the personality, would that be bullish or bearish? I don't really know. But certainly that could be a catalyst.
I like that you say you don't even know if it would be bullish or bearish, though.
Let me tell you guys a quick story. A couple of years ago, after returning from my overseas travel, despite getting my sleep back in track, my diet, everything, I was fading in the afternoon, experiencing afternoon fatigue. Couldn't concentrate, found it really hard to get anything done, total lack of focus, and I thought, I guess this is what getting old is like. But I'm always looking for answers and solutions. Rather than finding an excuse, I'd rather find a way. Enter Athletic Greens AG1, one of my secret daily weapons now, for almost 2 years. Within a few weeks of taking Athletic Greens AG1 daily, my afternoon fatigue vanished. This was the point. I thought to myself, holy shit, this stuff is no joke. Immediately started hassling my friends and family to get on this stuff and wouldn't take no for an answer. It had such a positive impact on me, my energy, my performance, my mood, and completely killed my afternoon fatigue that I couldn't shut up about this stuff. This is literally one of my biggest productivity and health hacks. If you're a peak performer and really want to get the most out of life, feel your best and perform your best, Athletic Greens AG1 is a non-negotiable. With a 90-day money-back guarantee, you literally have nothing to lose. So check the link in the pinned comment and thank me later. athleticgreens.com/SMR.
You've got to buy on this stock, and like many others, you see the price basically doubling to about 231 is where the general price target is for this year in the next 12 months for Tesla, and you have about 220. Can you talk us through the reasoning, why you think this is a buy the dip moment?
Yeah, so while Tesla is shifting into a slower growth mode, the growth is still there, and the stock is at a reasonable price right now. A lot of the ancillary businesses like full self-driving and potentially growth in the insurance are being heavily discounted, as well as future cost savings that management can still implement as it ramps up its factories and as it achieves its 2020 Battery Day goals. That will still drive margins higher. So I expect profit growth in excess of revenue growth, even if revenue growth is more in the high teens over the next 10 years instead of management's 50% target. So we see a lot of upside in the stock at current prices.
Is it then a story of show me stock? What's interesting is, yes, they did miss their targets, their own internal targets to deliver more than 50% growth in terms of deliveries.
Now, I hate to be that guy. Actually, who am I kidding? I am that fucking guy. But I need to call bullshit on this. It really, really bothers me when people say things as if they're a fact that are not true. Allow me to quote from Tesla's financial results. Published early 2022, at the beginning of last year, what did they actually say about their target? By the way, this wording has not changed in any of their subsequent quarterly reports. Allow me to quote. It's on screen now. We plan to grow our manufacturing capacity as quickly as possible over a multi-year horizon, not a 1 year horizon, over a multi-year horizon. We expect to achieve 50% average annual growth in vehicle deliveries. So just in case you are a potato, apparently some of the folks at Bloomberg who do their research fit that description. A multi-year horizon, an average rate over a multi-year horizon, believe it or not, actually is what they mean. An average rate over a multi-year horizon, not the rate in a single year. That's the whole point of the average and multi-year horizon. The level of potato here really does astonish me. Tesla didn't miss their target last year. If you want to know whether or not they've missed their target, you need to look at a multi-year horizon. Go back a few extra years. Of course, if you do that, you'll discover that they're well in excess of their target. Still on track. But that doesn't get as many clicks or as much attention, does it?
They missed it. They got in, but 40% is still strong. Do we need to have more clarity, more real sort of basic analysis and future guidance coming from Tesla so we can set our sights a little bit more realistically?
Translation: should Tesla spoon feed the Wall Street stock analysts and do their job for them? Remember, Tesla doesn't ever miss. Wall Street misses. They're Wall Street estimates. Tesla isn't missing their own goals. Wall Street's missing Tesla's own results.
I think that certainly would help. Management just saying that we expect to grow 50% a year in deliveries over a multi-year period does not really help with year-to-year guidance, especially as Tesla's now big enough to start seeing a demand impact from an economic slowdown. Now that they're at 1.3 million vehicles annually, they're going to start to see some consumers who may want to hold off on that big ticket item and then wait till the next year while we're in a slowdown. So, I think management guidance and the more sort of confidence they can give us around specific targets and numbers from a year-to-year basis would certainly help the stock, because I think investors right now are searching for what is the right growth rate. And with a high-growth stock like Tesla, even small changes in a growth rate assumption can materially change your valuation for the stock.
Dear everyone whose brain works, all you need to do, rather than waiting for Tesla to give some specific here's how many vehicles this year we're going to deliver, instead of doing that, all you need to do is pay attention to Tesla's wording about their future outlook. At some point in the future, they will change their 50% over a multi-year horizon target. That will change. When it changes, we now know they're no longer aiming and believe they can achieve 50% growth in their deliveries year over year on a multi-year horizon, on average. It's that simple. Again, just speaking to the potatoes who are currently watching, in Tesla's quarterly results, every quarter, they post how much production capacity each factory has. Now, in fairness, sometimes they underestimate, they do sandbag a little bit. So sometimes they'll say greater than rather than an exact amount. But if you use your brain and you look at the number of vehicles they can produce at each facility, that's a pretty good guide. In addition, if they're guiding 50% average growth in deliveries, multi-year horizon, that's still what they're aiming for and still what they believe they can achieve. Full disclosure, my current Tesla valuation model, which is available exclusively on Patreon to support us at the investor level and above, in the base case, has almost exactly a 50% annual rate of growth on average over a 3-year horizon. The bull case, 4 years, and it tapers off quite dramatically after that. I understand a lot of the Wall Street Poindexters just can't fathom, what do you mean 50%? Just tell us a fucking number for the year, Tesla. But Tesla's not going to do that. Again, all you need to do is pay attention to their fucking earnings report. When the outlook changes, when they're no longer aiming for 50%, that's when we know they're no longer aiming for and believe they can achieve 50%. I can't believe I have to say this out loud, but I do.
Yeah, I mean, talk to us about the incentives that will be having to be dangled in front of a US buyer. Is that a worry, or is that a shining a light on the fact that the price point is going to have to change?
We do think there's going to be some small price cuts, as Tesla's going to want to make sure that as many of its vehicles as possible, specifically some Model 3s and Model Ys, will ultimately qualify for the Inflation Reduction Act tax credit. And heading into an economic slowdown, I think that's going to be a way Tesla can generate strong demand growth. So we are modeling some price decreases for that platform next year, in this year, to help generate demand growth. And then that's going to help Tesla grow to what we're forecasting is a little over 1.6 million deliveries in 2023.
So with all the daily sort of tussles that you get, whether it's on social media or whether it's on air like this, whether it's about the worries of whether 40% is still a pretty good growth rate, whether or not we should be looking at deliveries rather than demand. From your perspective, what is the main thing that we should focus our eyes on now when it comes to Tesla? Is it China? Is it deliveries? Is it demand? Which side should we be looking at?
I think there's two key things that we should continue to focus on. One is, as we go into 2023, what will the growth rate be? I still expect decent double-digit growth. I'm forecasting 24% growth next year in deliveries. And then two, what do the profit metrics look like? If you remember back in the first quarter of last year, Tesla achieved nearly a 30% gross margin in the automotive segment, and that was before the opening of the Berlin and Austin factories. As production ramps up in those factories, I do expect the gross profit margins will improve sequentially. And so if Tesla can continue to show profit improvement, I think that helps give confidence that the stock can still work and still be a growth stock.
We had this nice 3-day little bounce in the stock after a horrible run in December, but we lost that again. 2-year lows here after those lackluster delivery numbers, like you mentioned, missing that delivery target by 20,000 or so. But I think the big question here, Brad, is the demand concern. Are we seeing that come down? A number of analysts are asking that. Is Tesla going to actually cut their long-term 50% growth rate on deliveries eventually? Are they going to actually have to do that? Because, what we're seeing is that the Wall Street and the markets are valuing Tesla like a traditional automaker now. They're cutting down their sort of growth of the company. We're seeing the Ford Ps come down here.
This is actually a great point. According to many of the price targets on Wall Street now, many of these dingbats are currently valuing Tesla as a car company, just a car company, which doesn't really make sense given the fact that they have about 3 times the average automotive gross margin. They have a huge software component that's growing. They're one of the world's leading AI companies. They're innovating in manufacturing like no other automotive company has done in history. They're making highly profitable, compelling, high-performance vehicles. They have a huge, growing energy business. Products still so good they don't even need to advertise. We just saw a Tesla plunge off a 250-foot cliff the other day and every occupant survived. 2 children with minor injuries. Due to the emotional panic at this point in time, this is actually a great point from Praz. Many Wall Street analysts are in essence valuing Tesla as if they literally are just an automotive company and they're barely growing. And they don't make any profit on their vehicles. And there's no software component. And they're not one of the world's leading AI companies. Blah, 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 blah. You get the point. Doesn't make sense, but Praz has hit the nail on the head here. Average Wall Street price target on Tesla now, less than $250. Doesn't make sense, at least not in my opinion.
It's still a very profitable business when you talk about Tesla itself, and they can make more EVs than anyone on the planet. But the story is changing now, right? They're becoming, as we see that demand come down, we see the actual demand for the products come down. We're seeing them kind of valued as like what a GM might be, what a Ford might be, and they're catching up too.
Praz, our team made a good point in our morning meeting this morning that we've been so fixated on Tesla and the stock slide, and that is right on the mark. Well, if that's the case, who's the other winner here? Is it General Motors? Because you've been covering General Motors a lot. You recently reviewed that new EV Hummer. It seems like they have risen to the occasion, and they're about to drop a lot of new models on the market that maybe does take market share from a Tesla that is maybe taken its eye off the ball because of Elon Musk.
I think Mary Barra there in GM has sort of outlined their strategy. We're going to take our time to get into this market. 2023 is our big year. Get that battery platform set up. Rick and I drove that Hummer, and it's an incredible truck. And I think that's what we're going to see in the new Silverado and the Sierra EV trucks. Very impressive. And they might be able to be price competitive too. So I think they might be the one big benefit here, benefactor as well as Ford as well. But I think it's still a big year for Tesla. They have their big investment meeting on March. They're talking about what's next for them, new platform. Maybe we'll hear more about Cybertruck. So there's still some potential for them to kind of emerge from a really sour 2022 and maybe kind of get back some gains 2023.
For what it's worth, Cathie Wood has also been adding to her position in the stock. She kind of started to rebuild her position in the fall and then added more shares to it. I mean, and I guess it just sort of reinforces the sentiment that there are these true believers still in Tesla, but that it's a very divisive company and stock for many people.
Yeah, I mean, a lot of high conviction owners of Tesla shares, heavily shorted, right? Came down a lot, but still a lot of heavily invested people that are really believe in the Elon story, and Cathie Wood is one of them. I mean, her high conviction trade, she had to sell a stock before to rebalance her portfolio, now she's getting back in. So she's in it for the long haul, so we'll see how that goes. But I think you're right. It's one of these stories that it's a huge retail investor stock, and there's such a heavy focus on their bulls that are out there that are really believe in the story.
And the bears might be savaging Tesla, of course, but at least they're able to hit their production marks. We're not seeing that from Rivian. Another disappointing number for them in terms of production, and this is going to be a big year for this company.
Yeah, so we saw the Q4 number come out, and full year 24,337 for the year produced, just shy of that 25,000 goal. I was a little surprised they actually came that close, given the troubles that they've had. But they ramped up a second shift at the factory. They produced 10,000 vehicles in Q4, 8,000 delivered. So still a long way to go. But I think the big question, like I think we're asking Saz, is that they got to make these vehicles produce them in an affordable way, like not 100% negative net gross margin.
Price tags are huge.
I mean, they're losing $100,000 per car, right, as of last quarter. So can they cut that? And they pulled out the Mercedes van deal because they're trying to conserve cash. So the big question is, can they actually become a profitable business, make these cars, and make enough of them?
Another great point, and congratulations to Rivian on coming close to their production target. Decent effort. This is stage 1, successfully ramping up production. Stage 2 is eventually ramping up production and driving costs down enough that you actually make rather than lose colossal amounts of money on every vehicle sold. That is the real test. Getting to volume, profitable production without going bankrupt in the interim ain't going to be easy. Tesla barely made it. The timing, of course, could not be worse as we enter an epic global recession. Being an EV startup or a legacy automotive manufacturer in 2023 is not a job I'd be signing up for. Let's leave it at that.
Joining us now is Morningstar analyst Seth Goldstein. He has an overweight rating on Tesla at a $220 price target. Seth, it's good to have you this morning. So, at $220, that price target now says you think that the stock's a double, I guess, from here over a certain period of time. I'm just wondering, what gets you there in terms of the fundamentals, the delivery outlook, and everything that's filters into this price?
Yeah, it's a great question. And when we look at Tesla, we still see growth, just not at the historical growth rates that were in line with management's previous statements of 50% delivery growth each year. We forecast this year in 2023 a 24% growth rate in deliveries, a little over 1.6 million.
So I just want to add some context to this forecast of 1.6 million vehicles delivered for the full year 2023. If Tesla continues to run Fremont and Shanghai at their current capacity and stops ramping up Berlin and Austin, they'll actually exceed 1.6 million vehicles produced for the year. If you say so. And again, the irony here, this guy still has a price target more than double where Tesla stock is currently at, yet still thinks Tesla's going to produce less vehicles than their run rate was at the end of last year, despite two massive factories ramping up volume.
And longer term, over the next 10 years, that's about a 19% revenue growth in automotive. And so we still see growth and expansion, and we think Tesla will deliver over 5 million vehicles by 2030.
I mean, technically he's right. They will deliver over 5 million vehicles, and it will be by 2030. But I think we might need to reel that timeline in just a little bit, and maybe by 2026 or 27 in the worst case. It really boggles the mind that there are folks out here who are thinking Tesla's around 5 million vehicles in 2030. They'd do that many in just the S, X3, and Y combined in 2030.
However, it's just a smaller growth rate than previously had been. So, we still think growth is there. We still think the cost reduction initiatives will help boost profit growth in excess of revenue growth. So we like the long-term story here, but it's clearly slower growth than previous. And I think the market's struggling to figure out how to price that in. Then you add the Twitter overhang, and we've seen shares take a massive hit over the last year.
Well, for sure. Let me just maybe frame it a different way. Tesla shares from the 2 years going into its peak price in November of 2021 was up 1,800%. Okay. Since then, down 75 or so percent, still up 400% from that November 2019 level. Maybe it became a mania on the way up and we created a fundamental story around it. Maybe it never had a business being $1 trillion company. And now it's at 20 times this coming year's earnings. It's the same as Apple's multiple. Maybe that's not a mispricing.
Well, I still think that Tesla will have a higher long-term growth rate. And, when we look at a year ago, we thought Tesla was very overvalued. We had a 1-star rating on the name. We thought the market was pricing in too optimistic of a scenario, assuming that Tesla would become the number one automaker, potentially even get closer to Elon Musk's 20 million vehicles a year goal. We never thought that was very realistic. We were more in the 5 million vehicle category, which we still are over the long term.
I sure hope this guy is long retired by the time Tesla hits that 5 million vehicle target about half a decade before his expectations. Somebody remind me, check back at the end of 2026. Let's see how many vehicles Tesla delivered. I've got a funny feeling I'll be revisiting this video for a little bit of low-key roasting.
And so we still see the growth, but clearly I think the market is pricing this thing as if it's only going to get to 2 to 3 million vehicles a year, as if the profit margin is not going to happen, as some of the ancillary businesses like autonomous driving software and insurance and robotaxi aren't going to materialize as management has expected.
Fair point. Seems like the market is definitely pricing Tesla as if they're only going to make a couple of million vehicles a year ever. They'll make zero profit on those vehicles. There's no software element. They'll never solve autonomy. There'll never be any robotaxis. They'll never scale up their energy business. They don't have any AI expertise. The Tesla bot will never materialize. And in short, Tesla really is just a car company. What a moment in time. I've learned a few things recently. One, the stock market is far, far more irrational than I could ever have imagined. And I knew it didn't make a whole lot of sense, but damn, dude. I've also learned that the more fearful people are, the less their brain functions. As a result, this can present excellent buying opportunities for those whose cognitive faculties still remain online. And again, I want to emphasize the tide turning. Even long-term Tesla short sellers, stocks astrologers, have now flipped, thinking it was a good idea to go long Tesla. The talking heads on CNBC and other finance channels are starting to go, well, it's dropped a lot. Maybe it's a good buy here. When even the bears are now starting to turn bullish and the bulls are starting to turn bearish, something is going on. Let's leave it at that. Don't forget to click the link below to get your 1-year free supply of vitamin D with Athletic Greens AG1, one of my big health hacks. And then head over to Patreon, check out today's latest video on the insane amount of money podcasts can make. You will not believe it. So, see you on Patreon. Love ya.